Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning. Welcome to the U.S. Markets Wrap with me, Ryan Huang. And looking at Wall Street, we've got some red on the screen. Stocks retreating following 2 days of all-time highs for the broad S&P 500. Investors dumping some popular names in the wake of a lackluster forecast from retail giant Walmart that's been prompting questions about the outlook of the U.S. economy. So looking at the S&P 500, that was down 0.4% to 6,117. Dow Jones Industrial Average lost 1%, 451 points lower to 44,177. And we have the Nasdaq Composite dipping 0.5%. For more insights, we are joined by Laila Pence. She is the president and co-founder of Pence Wealth Management. Laila, thanks for joining us on the show. Always great to have you on. How are you doing today?
I'm doing great. How are you?
That's great to hear. I'm doing fantastic, and it's so good to have you on. Let's jump straight into what's been happening in the markets. We are coming off the back of record highs after 2 days, and then now it seems like investors are giving back, or at least taking profit. What's your takeaways from the latest session?
Well, I think that it's healthy. It actually gives us a little bit of buying opportunity. We've been having, record days here, and market needs a little breaker, and it's just, like you said, that Walmart earnings kind of shook up the market a little bit, which allows some investors like us that were looking to for a little bit of a downturn in some of the companies that we like, and it's nothing to really worry about. It's part of the market. Is people say, why do we have so much volatility? This is the reason we make money, is because we have volatility. Without volatility, we wouldn't be getting the kind of returns that are in the markets right now.
Yep, as they say, things don't always go in a straight line. And let's talk about that Walmart set of results. And this is where Walmart says profit growth is set to slow this year, even as sales is going to climb. Is that a sign of expenses, perhaps putting some pressure on margins, or consumers just tightening their purse strings? What are you reading into the latest quarterly results?
It's a combination of both. I think also, Walmart is maybe one of the companies that tariffs might affect a little bit, so they're being a bit cautious in their outlook. And it was a very small revision, but of course everything is overblown and overanalyzed. So we still expect them to do quite well, and that. That this is really nothing major. It's a lot of companies are trying to be cautious with their forecast because there's some uncertainty in those areas.
And talk about Walmart, they sell lots of stuff. Many of them made, grown, or assembled in the U.S. The rest of it, about 1/3 of it, is going to be subjected to potential tariffs from, for example, Mexico and Canada. Do you think there's going to be something to worry about on the front when we have tariffs weighing on earnings in time to come, margins perhaps on the tariff front?
One thing I've learned over the years, my many, many years in the business, is that any time there's something like that, or a little change, or whether it's tariff or something else, it takes the market a few weeks, a few months, and then prices adjust. People adjust. If you remember last time when we had tariffs, people thought it would cause a lot of inflation, and it didn't. And people adjust to new prices. This is like we've adjusted to the new world of inflation that we have. Prices are so much higher than they were 4 years ago. Now inflation has gone down, but things cost a lot more than what they did. It's just people adjust also because whenever we have inflation, incomes go up, and the fact that we still have reasonably high interest rates, people are making a lot more money in their fixed income investments, and banks. They're earning way more interest on their money, so people have more money to spend. And we do believe that that the market will adjust whatever tariffs that come in, and we're really not afraid of them. And generally, both sides adjust. It never gets passed through 100% to the consumer, the companies absorb some, the consumer absorbs some, and as long as you have the product and services that people want and need and use, they'll be fine, and take a little adjustment, and then it'll be looked back. And the fact that we're going to have tax law changes, and really, if that money actually gets used to keep the Trump tax laws and also expand some of them, he's talking about 3 major tax law changes that we really going to put a lot more money in people's pocket, which is no taxes on Social Security, no taxes on tips, and no taxes on overtime. If just those 3 things happen, you're going to see a lot of people have more money in their pockets, and whatever they have to pay to combat the tariffs and so forth, it would be absorbed.
Yeah, Laila, there's a point you picked up on, which is the U.S. economy largely service-based, so less sensitive to interest rates and tariffs.
Yes, I mean, that's exactly right. The economy, some companies that are definitely affected, like you said, Walmart and so forth, but the rest of the economy is not as sensitive to tariffs.
Okay,
it'll be just fine.
Let's take a look at some of your top conviction calls, and let's start with financials. So what is the thinking here when you look at where we are in the banking space?
Well, the biggest thing we think is going to happen to financials is deregulation. Financial industry has been so highly regulated, over-regulated, which didn't allow it to expand and did not allow it to do a lot of mergers and acquisitions. And as you know, the departure of Alina Khan, which is the ex-FTC chair, we think is going to, the new administration there is going to expand the M&A activities, and that should do very well for financials. Also, interest rates potentially staying a little high here and then going down toward the end of the year, that should expand loan provisions and lending again. And so those will be good profit centers for the banking and the financial industry. And, of course, the financials don't just include banks. They include, investment banking and investment firms. And so it's a combination of many, many financial industries, which I think are going to benefit with some of the changes that are being proposed and could happen.
Yeah, talk about deregulation. I suppose that's going to help the tech sector as well. And, of course, you've got an AI boom playing out.
Yes, we definitely this is still our top conviction is artificial intelligence and technology. I mean, you look at even today, those areas of the markets held up better than other areas. And because there's just, the demand and the need and the expansion is unbelievable. I was listening to one of the companies today that there's basically 400 million people are using AI now, whereas a few months ago it was only 100 million. So the number of users that are using the technology is expanding very, very rapidly. And that really helps have companies and people be more efficient, companies be more efficient, and also reduce costs. And if it could be used to reduce some of the labor costs that companies have by replacing it by AI, that would increase companies' profits, and that will come right down to the bottom line. And so it really is a big movement. We think AI is as big as what the Internet was many years ago. It changed our world, and AI is changing our world. And investing it is definitely, if you have a long-term horizon and can live with some volatility, is still a very good place to be.
All right. Sounds like early days and lots of opportunities for AI and the rest of the tech space as well. And financials, another area to look out for. We'll have to keep it there for now, Laila. We've been in conversation with Laila Pence. She is the president and co-founder of Pence Wealth Management. Laila, thanks again for your time and insights this morning.
You're very welcome. Anytime.
All right. Great having you on. Catch up again next time. Stay Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.